Hello, today is May 21st, 2022. We always start with our disclaimer, go over our calls, and then make some predictions. So my trading plan for Monday, May 23rd, 2022. It's a plan. I can change it. I can be wrong. Anything you do should be at your own risk. Friday, we look for the pattern with the early low, which is this, and Monday should have the early high. We said unless we gapped and promptly overtook Thursday's high, we should see lower prices. We came close, but we didn't overtake it. We got lower prices, and we also said if we didn't gap and promptly trade outside the day's range, that next most common the close will change, and we closed within a fraction of unchanged. This was our plan B, next most common, closing little change, big move the next day. So we're looking for a big move on Monday. And here's where we said if we didn't overtake Thursday's high, we'd see lower prices. This is my thinking about what we'll see for the daily patterns next week. We did have a target, 38.8964, when we gapped up. It didn't necessarily have to print Friday, but that's not saying it wouldn't. And it did. We still have these higher targets, but there's no time limit on these. They'll print it sometime. We can't say when. During the day, MEJT said this move wouldn't stick, that we'd retrace, and we did. These are the demarked buy signals. Again, as signals haven't been too good on calling tops, but they have been pretty good on calling bottoms. The stop loss is determined by the closing prices, and since we traded up slightly, we haven't even closed under the day that gave the combo buy signal. This is the weekly chart, 2 weeks under the lower Bollinger band here. That tends to be an area where one should look for lows. Here's a volume spike on the E-mini contract. Normally you want to see a big spike at market lows. It isn't a pinpoint market timing indicators, but it certainly tends to occur close in terms of time to where the low price is. There have been so many days with high volume. I don't think it's too different than having one big spike. The important thing is people tend to unload stocks at the lows, and they do so in grand style. Well, here's the daily chart. You can see how we have this trend line here. We stopped right at the trend line. The rule is either you gap under the trend line or the trend line wins. If we gap under Friday's low, it can keep dropping. Otherwise, if we do trade under it, which isn't required, but if we do, it shouldn't stick. We should retrace to the line. This low is a Fibonacci target of this prior consolidation. It's also a Fibonacci target of the top. And if you like Fibonacci, we've now rallied 1,618 points from the COVID low, and we retraced the 61.8% level, which is a common place where these declines end, even if only temporarily. I'm sticking with this count that we completed in ABC for A. This could be an expanded flat. Let's take a look at that. I have this is A and this is B. Let's take a look at this ABC for B. If that's A and that's B, that could be C. The fibs are there. Doesn't mean other numbers don't work, but that one certainly does. You can call this a wall into the close. So I can't say gapping down here is impossible. But usually when you have a rally like this into the close on Friday, it keeps on going. If we gap down instead, of course, it's very negative, quite negative. But most of the time, these things on Friday keep going up. And what's important about that is that we tried to break under these prior lows, but at the close, the lows held. And for now, at least, that's a rejection of the break to new lows. We still have to follow through. I mean, if we open down here, it doesn't mean anything. But if we follow through, particularly if we overtake this high, that gives a Trader Vic 2B buy signal. Well, Monday's pattern has the early high. We could still gap down, though. Typically, it's a bearish day with a final hour low, but if it's strong instead, more strength should follow in subsequent days. We've got really almost everything we need to call a very significant bottom here, even though I think lower prices are going to come later. We rejected the break to new lows, stopped at the standard Fibonacci retracement level, have trendline support and DeMark buy signals. What we don't have yet is follow through on the upside. That's really all you need. And these late Friday rallies tend to continue, which means we could see that Monday. Today saw the risks of jumping on the train too soon, but the train hasn't reversed yet. If the declines to continue unabated, we should gap under Friday's low. On the other hand, should we rally past Friday's high, we would trigger a Trader Vic 2B buy signal, which coupled with the other signs of an oversold market should lead to a good rally. We still would need confirmation the following day by trading past the close of the day, giving the buy signal. To me, this is just about everything you need for a major low. What you really have to do is to stop signaling and start trading higher. And once we trade over this high and follow through the day afterwards, I think you could have pretty good upside. I mean, if this is A and that's B, and if C is equal to A, I mean, you come appreciably higher. That's like, what, 150 handles? And there's nothing that says C has to equal A. I mean, C could be 1.618 times A, because you've got a lot of things here at this low. If it is a low, that you just don't see very often. So Monday's pattern has the early high. We get follow through, go through there. I think we're going higher. And if instead we gap under this, the bottom falls out. So let's take a look and see what happens Monday as the early high. And that's today's call.